Hello and welcome to another MCO update on HBAR. The HBAR has now formed what I would call a healthy fifth wave. That's what we wanted to see in yesterday's update, while the price had already pushed a little bit above the swing high from the 25th of April. It wasn't really what we would call a healthy fifth wave, but now pushing to the next fib level, that's looking good. In previous updates, I also pointed out this potential inverse head and shoulders pattern. So we actually have a break above the neckline, which was here this resistance around 20 cents. So those of you who've watched previous updates were aware of that pattern. I don't like these patterns so much. Inverse head and shoulders, head and shoulders. However, if we have the Elliott wave count on our side, I typically pay a little bit more attention to these, right? So Elliott wave also suggested that we have a good chance of getting either a fifth wave to the upside or maybe even this C wave rally in the white scenario. And we don't know exactly which one it is, but so far the price is following the idea, that we could stretch a little higher. So what I want to do in this video, I want to share with you what are the relevant support levels and the next upside levels to watch. What's the structure? At the moment, it's, as I said, a potential five-wave move in a leading diagonal, which means the structure can easily change. This blue scenario, which is a five-wave move up, which actually would be quite bullish, has problems. So I do not necessarily expect it to really play out like that. The structure could change. For example, the move up could extend more directly, which would create problems. For now, as long as the market stays below 24.7 cents, up here, this level, the 78.6 extension, I can see the move up as a fifth wave. Fifth wave of a leading diagonal, of an even larger five-wave move. That means as soon as we have a top in place, we can define the support area for a wave 2, corrective pullback. What should ideally happen is that somewhere between here and 24.7 cents, the price would start the pullback. Then we have a so-called 1-2 setup, a classic Elliott wave trade setup. And then from this support area, a third wave rally to the upside could start. Good performance and everything would be expected then. However, if we see further direct upside, which is expected as long as we're holding above 19 cents, because that's the signal level below which we can start to watch for a correction. Above that, anything just testing support, it's just the consolidation above support, right? So it could just extend higher as long as we hold above 19.1 cents, possibly to 22.9 cents, 24 cents. That could all still be part in the blue count. But way above that, especially targeting like 25.6 cents or 27.5 cents, and there's a lot of resistance up there, previous swing highs and so on, that would make it look more like the ABC structure in white. And that would not necessarily be bullish. Short term, yes. But overall, clear three-wave move up. So we have to take it level by level. For now, the short-term focus remains on higher prices, but don't necessarily expect a five-wave move to generate the nice pullback you're looking for. It will only happen with a break below 19 cents. As long as we're holding above that, direct upside is possible. Actually, I would find it quite likely that we stretch a little higher, even in the blue count, for a somewhat more healthy fifth wave. It's already good, but it can always go a little higher. But any break below 19 cents would be our signal that a larger correction has started. That's the update on HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.